Gardner is on the show. She's Senior Wealth Manager at Velocity Investment Partners at Raymond James. She's taking your questions today on Canadian and American large caps. Here's how to reach us. Toll free 1-855-326-6266. You can also send us an email question at bnnbloomberg.ca. Brianne, thanks for joining us today. We are seeing definitely some upside in the market today. That's refreshing. But it's been a wild ride so far this year. You're saying it's all part of a cycle. I'm wondering, what do we take away from all this?
Yeah, thanks for having me as always. I do see that the stock market and investors are seeing that the stock market is definitely experiencing, a little bit of a significant sell-off. And this is really fueled by the trade wars and a little bit more of economic uncertainty that we're seeing across the board. I think the trade uncertainty, does lead to profit uncertainty, which is why the markets have been a little bit all over the place lately. One day up, next day down. We're seeing some positives a little today. But high valuations and some of these stalled tax cuts are really compounding investors' concerns. So we have seen some negative sentiment among consumers, and that is also adding to the market volatility. The one thing that the markets hate more than, negative news is the unknown or uncertainty. And a lot of that is fueled, as I mentioned, by the trade war, by what is happening, putting these trades on, taking them off, delaying them. And we have really seen the S&P 500 slip into correction territory, falling 10%, while the NASDAQ took an even bigger hit, down 14%. And the TSX held up a little slightly better, but still down. And it has been a little bit of a rough stretch. But as you mentioned, pullbacks are part of the market cycle. And historically, they happen 1 to 3 times a year. Even if they don't feel great in the moment and do cause a little bit of anxiety for investors, several factors are behind this market pullback. And we still think that there is upside for 2025 for the stock market. I think we're seeing this rotation from big tech and the Mag 7 into other sectors and geographic areas that are well underway. And not everything is really getting dragged down either. I think investors with diversified portfolios have seen some bright spots. Bonds have really outperformed stocks as investors have shifted towards some of these safer asset classes like fixed income. In Canada, you're seeing materials, especially gold. I know that was recently talked about today too. Stocks have been strong. Even international markets, if you're looking at Europe and China, are up 8 to 10% this year. So despite the volatility, there's still no clear sign of a deep bear market.
Should investors consider going outside of North America, as you mentioned, since some of the overseas markets are doing better until at least the trade war gets settled?
Yeah, I think for us, it is a little bit, we are more active managers. So I think, and I was on in January too, talking about taking profits along the way. And I do think this is a big reminder for investors, not always to just ride the wave, but make sure they are taking some of those profits off the table and being able to raise cash to pick up stocks when they are at a sale. From an international perspective, yes, we do see some upside, or have seen some upside in Europe and China. We are a little hesitant right now, but we are definitely doing our due diligence on a little bit more international markets. But there are some geopolitical risks still that we would advise clients to make sure that they are taking in consideration, all of that before just jumping in when there is a little bit of a bounce rally there.
Okay, we are going to take a break right now. Brianne Gardner sticking around, Senior Wealth Manager, Velocity Investment Partners at Raymond James, taking your questions today on Canadian and U.S. large caps. Back in a moment.